Hello and welcome. Welcome back to the Universal Expert Advisor tutorial part 3. In this one we will be continuing our discussion on the inputs of the Expert Advisor. We were on the stochastic take profit and stop loss, which is just when the stochastic K line, the green line, crosses the D line. The market would check to see if it is positive or negative and close the order. Based on that value, as long as it has reached the minimum pips that you have set at the minimum stop loss and take profit multiplier. So that way you will always have a certain amount of pips per profit or loss, just to minimize your immediate opening and closing of trades. Stochastic change is just a change from one stochastic to the next. If you look at the data window, you can see stochastic here is at 33.40. The next one is 37, so that's an increase of 4 almost. It's not 5, what is the current setting, but so it wouldn't actually buy here if you had that enabled. You can change that number to whatever you like. You can change it to 3 and then it would actually get into it. Or you can change it to false so it doesn't actually affect the market at all or affect the expert advisor. Next is stochastic trade limiter, which is it limits the amount of trades based on stochastic. So 2 bars into stochastic is a perfect example. Stochastic crosses. 2 bars have occurred. There will be no more trading after this bar or no more buy signals. It will minimize your peak trading. That's the whole point of this. To minimize your peak trading, to minimize your losses, right? So 2 bars into a buy signal, it prevents any more trades from occurring. Basically just minimize your losses or potential losses. Next, we're going to go just a quick overview of all the indicators used. All the indicators are on this chart here. You have a slow and a fast moving average crossing. The purple is fast, gold is slow. If the purple goes above gold, you have a buy signal. Same with stochastic, you have a percent K line, percent D line, and it's slowing. Once the green line goes above the red line, buy signal. Same thing with the RSI. Once the fast RSI, the green line goes above the red line, buy signal. MACD is a little more complicated. The red dotted line is your signal line, and your MACD is your actual bars, so you would need signal to be below, and 2 MACDs increasing in value. So this is a buy signal here. It is a little lagging in this one, but you can adjust all the parameters to make it more responsive, or increase the numbers to make it stronger and slower, which will increase your potential pip gainage. And then you have volume, which is just 2 increasing volumes, and also a minimum volume level, which means which prevents sideways markets. If you look at the data window can be opened if you just go to view, data window. If you look here, the volumes is 200, 235, and 145. This is a good indicator of a sideways market. So the higher the volumes, usually the larger the bar size. So if you set the minimum volume level to a certain level, this will usually indicate a certain bar size. So if you want to get a certain bar size before you get into a market, you can set it to whatever you want. This is another good example: 100, 110, 420. It's pretty large. 95, 325, 216, and then 400. See, now you have an increasing, right? This is 1,000, and then 1,300. It's just a way to minimize a false entry point or to strengthen another indicator. Volume by itself is not that strong, but matched with other indicators, it can be very strong. All the indicators are matched in the use of linear weighted and weighted close. That's just to for congruence, or so they all match, so they are more evenly matched for entry points, just to give you a stronger entry into the market. Also, the magic number can be adjusted. It's just the number of the expert advisor, and it prevents it from interacting with other expert advisors you may have running in the background. I'm going to stop for now, and then we're going to do a back test. So stay tuned.